My name is Anders Even Girke, and I'm a program manager in the supply chain costing area. This session is a chalk and talk session. I will divide it into two sessions, actually. First, we start with chalk and talk. Then I will present some of the processes that we have enhanced in AX 2012. And we will go through the beginning of the process to the actual end of the process. But I will demonstrate the features in AX and also explain why they're developed as they are and what you can benefit of these features. So first of all, I would like to know which topics that you as audience would like us to go through in this session. And hopefully that is what I've already planned for you. And if not, I will take these topics and try to put them into my presentation. And if there's something completely falls out of this list, I will of course address it in the end of the session in a more open Q&A. So any of you have any topics that you want to have discussed? Yes? Costing sheet. I'm smiling because that is definitely in my list already. Purchase cost. More topics. Average cost? Yeah. Costing sheet / purchase cost. That can be two different things. But I will come into that because I have that as part of my topics. You said average costing. I will rephrase that to periodic weighted average costing. Yes, I have something about that as well. Until now, it goes pretty good. I'm happy. That means at least I have more in depth. Average, periodic weighted average costing. More topics?
I have a question on standard costing. I know that in 2009 you don't have to run inventory closure anymore. But I was curious if it still was a need because normally you also would close the transactions. And that doesn't happen then as well. Is that not a problem? Yeah.
Many people misunderstand, and I don't know if I've actually been one of the guys making the misunderstanding in the market. We say that a closing is not required for costing. That doesn't mean you don't have to run an inventory close. Because the closing is part of a process of ending a period for preventing transactions posted back in time, because now you have reported this period to your finance guys and they go on with the reporting to management. So closing is definitely needed. You still need to end your period. And yes, standard cost items are not updated during an inventory close. But if you are actual costing on some of your raw materials, variances against your production and standard cost will be made during an inventory close. So standard cost items produced is part of the closing engine because we make variances to the productions during the closing. So it's a misunderstanding saying that it's not, you don't have to run closing. You definitely have to run an inventory close. But it's as not processing anything on the items and transaction itself. And there is no settlements done through the transactions as when we do actual costing.
Is lot-based costing a possibility to include? If not, is there any future enhancement to lot-based costing?
Lot-based costing in eggs, as it currently is handled by batch and serial number, which is the way AX have unique identification costing. That is either serial number or batch number. And that will continue. So, full costing, absorption costing?
Yes, with all the indirect costs, all the structural costs, asset depreciation and so on, included in the inventory value. The cost doesn't come maybe after my production process.
Full absorption. And then I will call it over. Yeah. Multiply. Yeah, you're putting me on a test now. Inventory, cost, presentation. Can you presentation? So I've written up here full absorption, which is also implying over under end of period absorption if you have either over and under absorbed during the normal costing period. Yes. And then in this, the third one here was multiple inventory cost representation for multiple legal purposes. Yes? ABC costing. Now I'm not so happy because I get into problems now, covering them. Yes? Costing the lean. I don't know if the lean session actually has touched on base and costing. I don't have lean plan for this presentation, lean costing. I must admit, but I understand your concerns. No, I can costing, yeah. Currently in AX 2012, you can only do standard cost, and then we do backflush costing at end of period. And the reason for why that is currently is that we don't have any relations to the transactions. And that also means when we do the variances, as we do in standard, when we do the backflush costing, we don't tie it to any products. And if we were doing actual costing, we would have to do that. So for us to give you more cost methods, or flow assumption methods allowed for lean accounting, we would have to redesign the actual costing first. Not saying that we are not doing it, but currently out of the box, no. Yes? Sorry, I didn't understand that question first.
Is it possible to post basis for standard cost at cost of goods sold or issue time instead of inventory received?
So you want variances to...
Cost of goods sold level.
So you want the variances to hit the cost of goods sold?
Yeah.
Well, the variances are part of your cost of goods sold. So when you make a variance, you normally financially don't want it to be part of your cost of goods sold, but the variance accounts is in relation to your cost of goods sold. So that's how we have designed it right now, is that you choose which account to put on in AX today. So if you want this...
They are produced at inventory receipt level, at production time or purchase time.
Well, the variances when you purchase, you get a variance when you receive the goods, and you get another one if you invoice and the cost has changed. On production, you can get it on two phases as well. We still work with when we actually estimate the cost, and we also do it under the closing. If you are actual costing on your raw materials, you get an adjustment again if the actual materials was costing more than you anticipated. So you get variances at multiple levels and at multiple times in AX. But they're not posting to the cost of goods sold count in finance unless you actually design or set up the system to do that. That's because AX is designed to say, for every posting type we have in finance, we allow you to set up a specific account for that, or you can group them into one ledger account. Yes? So he wants the profit or loss on a daily basis, and he's costing FIFO. To be able to do that, that would require that you are perpetual FIFO. Currently in AX, we are actually perpetual FIFO, but we are retrospectively. That means we need the closing to go back retrospectively, go through all the transactions. You would have to do that, but is that really sensible? Because that means you cannot backdate. If you need to do that either. So the case is that AX has one FIFO, and that is perpetual in the sense that we post to finance at the time with an estimated cost, but we need the closing to go back and actually do the FIFO calculation, and that's why we are retrospective, which is good for the companies that actually do a lot of backdates and so on and doesn't follow a chronological order on the transactions. But some companies has a very chronological order of their processing of transactions, and they would like a clean perpetual FIFO. And then there's a complete periodic FIFO as well. these requirements are there, and we know it, and we're working on implementing that into AX right now, actually. Yes?
The splitting of the costs would reduce the argument for your own splitting of the cost into material costs and production costs and other costs in case of posting the consumption to the sales order.
If I say inventory, decomposition.
Without having standard costs.
Yeah. Yes, in composition. Composition. Inventory decomposition, yes. Currently in AX, we only support the decomposition with the cost roll-up for standard cost, and that will also apply for AX 2012. We will, though, move forward in the future to allow this for all flow assumptions, definitely. Vendor rebates. Yeah. In the sense that you want to be able to figure out if you actually need to subtract it from inventory cost or what? So you don't get the rebate when you actually purchase the good. You know it in the end of period if you have succeeded to purchase the 1,000 items you had an agreement on within this period, and then you get the full rebate, or you get a part of the rebate because you only purchased 900 or something like that. Yeah, no, we haven't touched that. Good point. Good requirement. Yes. Yeah, yeah. There's no doubt that it would be nice if AX automatically could eliminate all internal trade during a period unless the items was already sold at the receiving company. And yes, and it also follows in on the multiple inventory cost representation, that you want to have two ledgers of inventory with two different flow assumptions. Perfect. Yeah. Internal transport cost. And potentially, I also guess that potentially you want to do actually a sales price, internal sales price, if you want to make profit centers and so on. Yeah? More points? Landed cost. Didn't we have that? Yeah. Purchase cost. It falls briefly in here, and I will demonstrate that. Yes. Yeah, it follows the same. It's under the same idea. Yes. Okay, that gave me at least some points. More points? then I will show you what my presentation will be about, and I will then try to touch briefly upon the ones that I don't have. First of all, I need to show the disclaimer, which just states that whatever I say I cannot be accounted for. So I can do whatever I want, more or less, on up here. So my first topic is purchase cost. Plan cost calculation and costing sheet. That's my first topic, because that's where we normally start the process. You need to make a planned cost. We could have started with the cost accounting system. I've taken that out of this session here, because for two reasons. We don't have that many customers actually using the cost accounting, and it's not only the cost accounting module in AX that can feed you. It can either be an Excel sheet or some other budgetary system you're using. But normally you get some rates that you need to put into your planned cost, other than the direct material and direct labor cost. So I will start with the purchase cost calculation. Then we go down to the actual costing, down to the inventory close. So now we have run for a period. We have the actual purchases, actual issues, actual productions, and we have to end the period and calculate the actual cost. We have made some changes in AX 2012 in this area. Then we go down to the report of inventory and WIP. How do we actually present this information to our executives in the company? Lastly, I need to reconcile that my inventory and ledger is actually matching each other. And we have also enhanced that in AX 2012. And at the last, we need to get some insight. How is our inventory currently? Is there any measurements that I can get out of my inventory in AX 2012 that can help me either take actions, or can I present it in a nicer way than print a report with 200,000 items and go through them row by row to figure out how my inventory is? So this is actually my menu for today, and I will try to briefly read what I've written over there from here, and if I can touch the topics that we have discussed there, and then flag them out. So the components that I will show today is, of course, the supply chain in AX and the inventory. I will show you how to set up some master data and also create reference data, and I will primarily work in the client. And I will also use Office in the end from the Microsoft stack and also the SSS report to actually demonstrate what we can actually report in AX 2012 and how we can use Excel to actually make some insights and KPI calculations. The key personas that I will focus on is Ken. He's a controller, and he wants to calculate a planned cost from his budget. And when time has consumed, he wants to be able actually to do his actual costing. He wants to report it. He wants to do a high-level reconciliation of his inventory and his WIP. He needs to locate and correct any discrepancies between the inventory values and the GL values. And lastly, he wants some insights into the inventory. And I have Ellen. Ellen wants to know what is the actual physical inventory. Because what we have done in AX 2012 is that we have tried to actually separate the physical inventory from the financial inventory. And she also wants to get some insight into items, which items are moving around in my inventory. So she also wants to know something about KPIs and current values so she can take action. And I will now jump directly into AX and start the demonstration. So what we have done in AX 2012 is that we have actually gathered some of the costing-related setups. And the first place is under cost groups, because this is really the building blocks in AX costing. That is the cost groups. And if we create a new one, I don't want to use too much time in here. I just want to state that we have direct materials, direct manufacturing, and direct outsourcing. Direct outsourcing is a new one that was added in AX 2012, primarily for lean accounting. Because when you do subcontracting in lean accounting, we have actually created in a new way. So when you purchase a service item, it never goes into inventory first and then out to the subcontracting. It actually stays from a P&L directly into WIP. And that means the items never create an inventory. It actually creates a trans in a new table. So that's why we have it as a separate cost group. When you do job order costing, it still has to go into a profit loss account following the normal product receipt posting, and then it goes into WIP and then you offset your P&L and move it into WIP when you actually consume the service. And that is where primarily many customers and partners make a setup error when they actually do this integration into GL, and that's why many customers has reconciliation issues. Later on, I will show you them when you actually do subcontracting. And lastly, we have indirect cost. So this is the building blocks in AX 2012. If we then go to the costing sheet, we have now added in AX 2012 that we can do a new cost type, which is cost of purchase. In AX 2009, when we introduced the costing sheet, we only had cost of good manufactured. Now when you go in AX 2012, you have the option of creating a cost structure for your cost of purchase. I've made a very simple setup here in this company that for one of my cost groups, which I can attach a lot of items to, I will apply one fixed rate of indirect cost whenever I purchase items. This can be the indirect cost of receiving the items at your dock. It can also be landed cost. I'm not saying that it is ideally for the transportation cost and so on, but if you know the transportation cost and it's a fixed cost you have with your transportation company, you can easily put it in here. But if it's a cost that will vary for every single receipt you do, it becomes a problem because one of the points is how will you actually do actual costing on top of your normal costing in AX? And we currently don't have any mechanism that goes in after a period has ended and your indirect cost has changed to over and under absorb the cost. That has to be a manually process to secure that. So the landed cost, I will be careful, but if it's a fixed cost you can apply for the period, you can do it here. And it can actually be calculated in many different ways. So if I create a new one here, create, and I can make it unit-based. Just need my mouse to come down there. We can actually see that the unit can now be quantity, weight, or volume. So my indirect cost on a purchase can be based on the quantity that I purchased, the weight, or the volume that I purchased. And the same applies a little bit on the manufacturing. We have also enhanced the manufacturing. So when you do manufacturing overhead and its quantity, you can make it on the inflow quantity or the outflow quantity. So you can also actually add indirect cost during a production on the quantity that you produced rather than the raw material that you put into the production. Please delete. So this is the enhancements that we have done on the costing sheet. If we then go to the costing versions, we need to enter in the values in order to get this indirect cost applied to our purchase items. Yes? Still the same. We only allow one costing sheet for the company. Yes. Traditionally, the calculation of a product is called BOM calculation in AX, and that's the term everybody uses. We need to go away from that term to call it a planned cost calculation, because BOM calculation no longer applies as a term that justifies what we're doing. So what I've done is I've created a product I'll go on the release products. Under my purchase item, And on the default order settings, I need to apply how I want to source by default this item. And that is very important now, because when we do the planned cost calculation, we will either do it as a purchase cost calculation, or we will do it as a production calculation. So this is very important for the costing sheet to know where to start the calculation. Is this actually a purchase item? Because they will be run first, and then we go in to the produced items. You need to choose one by default for the item. Yes. You can change the default order type anytime, but currently you can actually do this per site. You can actually do this setup per site. Site order specific. So if one site purchase and the other site actually produce, you set it for this site, it is a purchase order default, and you will be able to apply an indirect on each purchase for this one and calculate it. And on the other side, you will produce it, and you get a BOM structure for this calculated. If you're actual costing, you just get one as planned, and again, it's a planned cost. You don't really use it for more than this is your planned cost. And the indirect is added to this. But if you then choose to produce it, you will just produce it at the cost you produce it. You will not have this indirect cost added because you produce it. Yeah, so this is for planning. This is for planning. If you don't use the plan, you will just use what you actually use. If you're standard cost and you say, I want to purchase it, but you produce it, you will get a lot of substitution variances because the roll-up says, I need to purchase this and put this indirect cost on these cost groups, but I actually produced it and I used all these cost groups to produce it with, which I didn't plan. So you will have substitution variances, and you can then go in and say to the guy, hey, why did you actually purchase it for a higher price than I can produce it, or vice versa? Because we planned to do this. You didn't follow the plan. Yes, it's the same field. Oh, sorry. Shouldn't have done that. Hopefully. I can get it up fast. So, sorry for this interruption. We go down again to the costing sheet, a costing version. And we will go into my niche costing version here. And we can now see on the calculation, I can say that this version allows production and purchase order calculations. We can go into my indirect cost and say for my purchase planned overhead, I expect that on site 1, when I purchase items, that we will add 10% in indirect cost. I then go to item prices, and I select my item for purchase, and I say on site 1, sorry, I need to, and this is important, the price type has to be purchase price. So I estimate now that my purchase price for this item is 10. And we can see that I can now do a calculation. In X 2009, if you were on an item that was not a BOM item, you could not do any calculations. But we can actually do that now on items of type item, but is default purchase order. We do a calculation for site 1. And we can see that it has actually now calculated an estimated inventory cost for the item, which is 11. And if you can go to summary of this transaction or this calculation, and we can see that it consists of my material cost group for the product, which is of quantity of 1 and of value of 1. And we can see that my fixed purchase overhead is 10% of the cost of the item. Yeah, I've seen you. And we add 10%, my equal 1, and that's why the estimated inventory cost for this item will be 11. Question down there? you can flip on the costing version. You can choose if it should either use costing version, purchase price, or the trade agreement purchase price. No, we look up in the tables when we do the calculation. And I can now activate the costing version. And my prices has been activated. So what we can do is now that we can go and make a purchase order. Of my new item. Just need my laptop to respond. And we pick the item, and we will purchase it. And I will purchase one piece at 10. And we will confirm the purchase order. And the purchase order has been confirmed, and we will directly invoice the purchase order. On today's date, and we'll post the invoice. And it will take some time as well. Done. What I can do is now is that I can go in and look, how does my invoice look? I go under invoice journals. And we can now see that on the lines, I can actually see purchase cost transactions and purchase indirect cost transactions. And on the cost transactions, we can see that we purchased the item at 10, and we also had an indirect cost charge added. So we can see that, yes, I said I purchased this item at 10, but because the landed cost or the indirect cost of receiving an item is 10% for taking it into the dock and put it into its inventory place, I add 10% cost, in this case, €1. And you can also go under the indirect cost transactions, and you can actually see how it has been posted to GL. So now we come to my second topic in the PowerPoint is how have we enhanced the actual costing in AX 2012. So what I will do to show this is I will actually make a transfer because I received this item at my warehouse 11, but let's say I want to move it to a secondary warehouse. So we will go into the journals and make a transfer. We create new and lines. And I will move it from my warehouse 11 to my warehouse 12, I believe it is. So it's important that I keep it within the same site. I'm only changing warehouse. And on this specific item, warehouse is a physical tracking location. That means I only want to track it for physical reasons. Cost-wise, I don't care. I cost per my sites. That's where I cost. The item is evaluated by weighted average. And we move it to my vendor warehouse. And we post the movement. A few hours has gone. We figure out that was wrong. It should never have gone to warehouse 12. I want to move it back again because I require it in my production anyway, so I need it back to BL11. Or it can be a movement to any other warehouse. It doesn't really matter. We create a new transfer, and we move it back again, in this case. The whole meaning with this transfer, and that happens a lot, it can be on bins, it can be on pallets, it can be whatever, you move backward and forward within a costing period in AX. That will actually specifically generate loops in your costing today in AX. Because in AX, traditionally, all inventory transactions generated carry a cost. And that means that when we actually do the periodic costing, we will have to cost and update every single inventory with a cost. And that means if you have a loop where a cost that moves from site 1, warehouse 11, to warehouse 12, and the cost has to be updated for this transfer, but then you move it back again, that means this cost, potentially because of other receipts of this location, has another cost when it moves back. But that means this cost up here will get another cost, and it has to update back to warehouse 12 again, and that means the loop will run and run and run until we hit the 2 breaks in the inventory close, which I will come to in shortly, that will break this loop. So now we have transferred the items back again. A second way loops can occur in AX is when we do sales orders. So I will just do a sales order for this item as well. Because when we sell an item to a customer, that itself, of course, cannot generate a loop, but then when the customer returns the item, AX is built that you can mark specifically that sales order, that is the one the customer returned. Because that will secure that the cost that we took out of inventory will be the specific cost that we put back into inventory, which is correct. But that is done by a marking between the return lots. And that is very good. It only has one problem in the logic, and that is when we do it within one period. Because again, the issue cost is calculated within the period to be one cost. Then you return it again. That means this return is part of its own calculation again, and that means we go into a loop again. So what it is that we have done in X2012, 11, is that we have broken these loops so they cannot occur. And what do you get out of this as customers? That is that this is actually backported, this solution, to X2009, and can be installed on the X2009 versions. How many in here are using X2009 currently? A majority of you. So this specific enhancement is actually backported to X2009, and we run it on a Polish customer, and they saved 70% of the time doing an actual cost calculation at end of period. Yes? What happens is that if you have a mark received and an issue, they will be treated prior to the cost flow assumption on the item kicks in. So they will be identification costing, so to speak. Because when we do transfers, there is no marking. Because it's a return lot. It's not a marking. It's a return lot marking. It's not a marking. In AX, we have multiple different kinds of markings. We have a lot marking with a reference lot, and we have return lot. And then we had the third one, which is a transfer lot for transfer orders as well. So we have 3 different kind of lot markings between each other. The traditional marking you can do manually is reference lot markings. And they are also respected. It's very important to state that if you go home and you install this, don't expect to get the full benefit the first time you close inventory. Even though this Polish customer saves 70% the first period, if you have transactions with partly settlements to it, it will only work on fully new transactions without settlements. So that means it can take a few closings before you get the full potential of this feature. But we have seen that they can come down to about 80% after 2 months. And that was from a closing that took 8 hours. And they cut off 80% of the time. And they had, I think it was 20 stores that was warehouses set up, and they had gazillion transactions in these warehouses. So I posted an invoice, updated my sales order, and I will now do a credit note on it. Sorry. So I press create credit note, and I mark it. And I say OK. And I go directly to invoice update. And if we look at the transaction on this item, we can see that we have our purchase order down here. We have our first transfer from 11 to warehouse 12, and we have our second transfer moving it back again. And then we have our sales order up here and our customer return up here. So that is a lot of transactions on this item. Now I will do my actual period. The fiscal period has ended, and I need to close my inventory. First, I will go and activate this non-financial transfer. And it's not pre-active in the system. You need to go and activate this as a user. And that is done under inventory and warehouse management parameters. And the reason for why this is not active by default in the system is that we are breaking the logic of InvenTrans traditionally in AX. And that means if partner solutions works based on the assumption that all InvenTrans get a valid cost during the closing, and they're using that for summing up, we will break that logic. But this is not different. This logic is simply purely costing-wise to say all the InvenTrans exist physically, because we need to know physically where the items are. Cost-wise, I only care about the transactions that generate cost. So if I sell something and a customer return it within the same period, nothing cost-wise has occurred during this period. I don't have to use time on giving these transactions a cost. Moving stuff around in warehouses or with pallets, I don't care cost-wise. Physically, they care. They need to know which pallet is where and so on, in which warehouse. Cost-wise, I couldn't care less. So this is the logic we bring in doing the cost calculation rather than we have split up the table in multiple tables. And the parameter is called activate closing of non-financial transfers. And when you activate it, you will get a notification saying once you have activated, you can never deactivate it again, because the system can never bring itself into a state that you can actually trust all the InvenTrans again.
And this refers to transfers within the same period, like months?
Yes, because all transfers has to happen within the same period, yes.
All the same site?
No, depending on what level you cost on, you decide. If you are, I'm site level here on this item, that means transfers within the same site, depending on your dimension set up on the item, will be closed as non-financial transfers. If I don't have site is financially active by default in AX. So you can only cost per site. If you only have one site, that means you cost per this site an item only. Returns is a little bit different. Returns is the system will check if the customer, the credit note on the sales order is within the same period as the issuer, and then match them. If it is not, then it will actually follow what it does today with the return lot, because that logic works perfectly if it's within 2 fiscal periods. But as soon as it's within the same, it actually jumped into the loop. And that's why we break it now by the closing. If you go and close inventory now for the actual costing, we can see, close. We can see that we have added period. The period means that it's just easier for you to go and actually close the inventory, because we had this traditionally that you need to enter dates. Most cost things happens per period, doesn't have per date. And you can also run batch job, which the closing normally is run it at your companies, I hope. you run it in batch, and you can run it as a recurring batch. The problem where you had to go and actually change the period whenever you wanted to actually close in the batch, because it just took the snapshot of the date that was currently there and then closed the same period 8 times if you set 8 recurring batch runs. Currently, because we're using period code, I can set the period code to be current period or prior period, and that means we're using what is known in finance, that its system calculates the date for you, or the period, based on the session date of your machine. That makes it a lot easier for you to actually set up these things. And we can also see that we have these advanced parameters here for closing, which is the maximum throughput. This is for looping. To break the loops in traditional AX closing is 100 loops. That is the maximum. If you hit 101, go back to the 100 and then expense the difference, or the minimum, the amount that you have that you're looping around. The same happens with minimum throughput adjustment. This is the maximum amount that I'm allowed to move around in my cost loop. If we go below that, we expense it to a profit loss account. But non-financial transfer should get rid of most of your loops in your costing. It's only if you transfer between sites forward and backward, but normally your processes should be that sites are at a higher level and they don't really interact so much each other within the same period, because sites should be a part of your flow for distributing your items to your customers, rather than they're handling like this, because that means you have some issues with your sites and how they actually fulfill their customers in the replenishment. I'm not saying it cannot occur. We close inventory. As you can see, it's very fast now. I have one item, so. We go back to the item on the release products, manage inventory, and on transactions. And this item is weighted average. And if you were running AX 2009, you would have said that there should be some weighted average sum transactions, because you have multiple receipts and you have multiple issues. But because I have non-financial transfer on, it closes in a pre-step in the closing engine all these transactions for me. So in the end, what I have here is I have one purchase order for the period. And that is because if we go to this sales order, under update, under general, we can see that this has been closed as a non-financial transfer. This one as well. And on the transfer transactions, we can see the same. Yes, question? Yes. If you cancel the closing, all the transfers will remain closed. So when we reclose again, we don't have to waste time on doing it again. The returns will open up again, because if you narrow down the closing period, suddenly this could be out of the time period that it has to. So that's why it's very complicated in that detail, but that is to be able to actually close a shorter period suddenly, that we have made it like this. So now I have closed my period and I have actual costing. Now I need to get some insight. What is my inventory value? And this is where we have put a lot of hours into improve the capabilities of reporting in AX. And again, all the capabilities, or at least 80% of them, is actually available for AX 2009 customers as well. So what we developed is 2 reports. We have the inventory value report and the potential conflict report. The inventory value report has been designed as an inventory framework, because in AX, if you create a report that is very complicated, where you can choose columns to show, which information to input into the report, and you have a traditional dialog, you cannot save your dialog. You can save the criteria for that, or queries for the dialog in a name, but you cannot save how you actually configure it. So what we've done is we've created this setup form, meaning that you can generate as many reports as you like for your company and then save them and run them with IDs. So when you execute a report, it's per ID, but you can generate as many layouts as you like. I'm really short on time, sorry. What's new in this framework is that it actually works with all the tables that contains cost in AX. Traditionally, the reports was only looking at materials. This has now been extended to also work with the full route trans, which contains all the labor transactions, and full indirect trans, which contains all the transactions related to indirect cost. And to make it easier for you, we have actually used a term that is more consistent with business term, which is resource, resource group, and resource type. So you choose which resource types to include in the report. It can be material, labor, indirect, or direct outsourcing as types. And that means whenever you want to see resource, a resource can either be a work center in AX 2009 and a resource in AX 2012 because the resource model is using the same terms. I know we have mixed it up a little bit there. Sorry for that. So a resource, it's very important. Somebody complains, what is a resource? A resource can be anything that can be costed. That's why the report has used the term resource. Resource group can then be an item group or a resource group from manufacturing or an indirect cost group. And again, you can decide how many financial positions your inventory should be shown with. I will show some of the examples that I have configured here rather than go through all of them. And it also works with ledger. So you can actually, instead of when you reconcile your inventory end of period, you don't have to print a trial balance for inventory accounts and then print the inventory value report and then reconcile it. You can actually get the inventory trial balance accounts balances into the inventory value report, and it will reconcile it for you in one report. So, and the execution takes place up on the reports. So we will go and execute one of the reports here. The first one, I will make a very basic report. And the reports are very fast. You're saying, oh, the report was not that fast in AX 2009, and now he has added more tables into it and a lot more transactions and performance. What we have done is that the reports are designed to run utilizing the batch framework. So you should always run the reports in batch. And that means each item is seen as a task, or each resource, sorry, is seen as a task. And that means we can actually subtract data for multiple resources at the same time. And that means the report is at least 6 times faster than the old inventory value reports in AX 2009. So this is one of the layouts. And that's because we also allow you to say, in AX we have the physical value columns and financial value columns, physical not posted to ledger columns, and so on. For some users, that makes sense. From other users, they want just to see, give me the inventory quantity and value. And you can collapse the columns into this. Very straightforward report. And we have cite in here, of course. The report can only report values on financial inventory dimensions. So if I clicked that I wanted to see warehouse on this item, it will just put warehouse as a column on, but leave them blank. Even though these items actually are posted to a warehouse, because warehouse is a physical inventory dimension. I don't have any cost on my warehouse. To get a cost per physical location, what should I do? Because this is where people misuse the traditional reports in AX. They just put in, I want warehouse, and then they looked at the value that AX provided them. The value was wrong. And that was many times the reason customers came up saying, I have 0 quantity, but a value on this warehouse. I don't understand that. That's impossible. But that is because you're reporting at a level, cost-wise, that doesn't exist. It cannot match. So to get a cost on a physical location, you have to take the average unit cost of the financial level above and multiply it by the quantity that is on each of the physical locations. And that's why we have added this report to the system, which is a much simpler report now for finding what is my physical inventory. And you can actually see what is my posted quantity, which is the financial inventory, deducted, received physically. Then you get an inventory quantity, which can match against your inventory value report quantity. And then you can also see registered and picked, and then you get your on hand. So this is a new report in the X2012 that gives you the physical inventory and every level that you want to see your physical inventory. And it's only based on quantities. So we have split it up again saying we have a physical report and we have a financial inventory value report. So hopefully we never get these questions. Why do I have 0 quantity and a value here? We should have got past these issues. So let's say I want to do reconciliation. I just show this one as well, because this is actually what I need to use. The same report, but I have the opportunity of getting an average unit cost calculated in the report. So I can actually, in this case, I've selected to say, give me the financial inventory columns and physical, which is a little bit more similar to X2009. I could also have get a total column for the inventory. I can actually make the same report layout as I could in X2009 if you want to, but you can make a zillion others as well. And here I have an average unit cost. And this is the cost I should multiply with the quantity on the warehouses that I got in the other report. So let's say that I want to reconcile. What options do we have? I have another report here. Because until now, the report has only focused on material as a resource type. Now this report, because I want to reconcile both my inventory and WIP, I've chosen that I have material, I have labor, and I have indirect cost. And I've also done some productions. And we can then see how much of my material is in WIP, how much of my labor, and how much of indirect is in WIP. Previously in X2009, to get this value, you had to print 4 different reports. Material in process, work in progress, indirect in process, and then people mostly forgot the report is finished. Many people forgot that report because this is the one that offsets your WIP. And you have to subtract it for the 3 others to get the right value. Now we do everything in one column for you. And you have the inventory as well. So now I have my physical values from the operation layer. Now I need to reconcile that against my ledger. I don't have to print the trial balance to do that because right down here I have all my ledger accounts. That represents my inventory and the WIP. The only thing you need to do as a user is you need to assign the general ledger account that equals your operation layer. You need to put in the main account that hold all the inventory accounts and hold all the WIP accounts from GL, and then we match it for you. And hopefully they will match together the numbers. Oops, I can see that I have a problem here, right? Because if we look at the total sum, and I must admit, yeah, I'm a little bit, the controls of data set requires that I have a ledger account for car audio receipts, car audio issues, and car audio returns. If I only had one for car audio, it was a lot easier for me to reconcile based on the item group. Sorry, it must work. Which is my car audio resource group. I don't care about items or products in this specific report. I want to reconcile on the group level first. Because if that matches, I don't care about the individual items. But unfortunately, the controls data set requires in main accounts that I have 3 accounts for the car audio group. I would have created one only. So you can actually go down and reconcile. And we can also see the total. And the system actually tells me that I have a discrepancy of 1,140. So that means my inventory from GL doesn't match my physical operation layer of inventory. Unfortunately for that. And my WIP at least match. So I only need to figure out why does my inventory and my GL not match. That has normally been a very painful process in AX. Really, really painful. And we haven't done anything to solve it, sorry. We have. Sorry. We have made a new report for you because the old reconciliation report was really, really difficult to use. You really need to understand the system before you could actually use it. And even in these cases, it was not really accurate anyway. So what we have done is that most of the conflicts that you find when you reconcile is actually because of setup. Because the old report was actually only checking When we say we post 10 in operation layer and inventory, did we also post 10 in GL? Actually, we have a lot of controls in the finance voucher that secures that we post the same amount. So it doesn't really make sense for me to start checking, post 10 here, also post 10 here. If we make these kind of errors, we should find it ourselves in the test phase and in the coding, and the voucher should actually come and tell me I'm imbalancing. So most of the errors is actually setup and configuration. And what we have done is that we have created this report, which you actually just execute, and then it goes in for one period that you specify. Be careful, this is not a report. In this case, the balances will match because I'm printing for the same period and I only have transaction for this period. But this only looks at the current period you specify. It goes through all inventrans, all ledger trans posted in this period, and it starts validating. And it gives you a valid and saying the module of inventory says that the value should be this amount, and the general ledger says it should be this amount. And we have a discrepancy. And then it starts listing all the conflicts that it's found during this period. The first error here is it's a purchase order. And we have tried to give you a clue what is it that went wrong. Why is it that this is not reconciled? And this is the comment. The posting type product received is a product of type service, and it has been posted to a main account that represents inventory. Classical error, I see it often. This is a service item I need to use in production. I need to purchase it to a purchase order. But I forget that this item should not post, even though that it used purchase receipt posting type, it should post to a P&L account when I purchase it. It has to go to P&L. Only when I pick it into production, it offsets the P&L and moves into WIP. It never goes into inventory. But because it uses the same transaction flow as a normal purchase item, people forget to change the account in the posting type setup for these items. Really, really often seen as a conflict. Really, really difficult to find if you don't have a report that actually tells you this is a problem. The second problem is actually also very common. Somebody has misunderstood the posting type for posting into inventory and the offset of the inventory. So this is a sales order, and the posting type order packing slip has been posted to a main account that does not represent inventory. So that means the issue of inventory has been posted to an account that is not inventory related. Well, it has to because I'm picking items out of inventory. But the offset account, which is the second error for the same transaction, which is the offset posting type, has been posted to an inventory. Somebody just flipped around the posting types when they integrated into ledger. Commonly seen, really difficult to find. So we have actually two errors on the same inventrans. Of course, they only influence with one amount to the conflict problem. And then here we have some sales order issues. And this is people asking me, why are we showing so many errors? The thing is that you can have errors in your system that actually equals out. So this error here is actually a sales order where I've posted the order type has been posted, the order packing slip type has been posted to a main account that does not represent inventory. The amount is minus 20. And then I have it with plus 20. And we can see it actually relates to the same transaction because it's the same lot ID. So that means I don't have any conflict. That's true. Ledger-wise, conflict-wise, reconciliation-wise, you don't have any conflicts. But you still have a problem in your system. You're just lucky in this case that you have actually invoice updated the sales order, because when we invoice update, we offset the physical postings we did. That was wrong. But we offset them equally wrong. So we're still telling you, totally you don't have a problem yet with your balances, but you still have a setup issue you need to fix. Because if you only packing slip a sales order for the next period, you will get a problem in reconciliation. Yes? Yes, it is. The inventory value report and this one is released in X 2009. It has been for a while, actually, yeah. And I don't know how many is using it. And I will put to some white papers also that we published 1.5 hours ago how to use them for X 2009. The last thing here is, the last error I have here that is common is, because we're also checking the ledger postings, we're also checking which posting types in ledger has hit these inventory accounts and do they actually be part of inventory. So the last one is very common, that a controller or whatever it is has to adjust inventory value. What does this mean? He goes into a general journal, enter into the inventory account, adjust it by 2,000 or 1,000, and then he's happy with his main account because he can report balances now to the tax authorities or whoever. The problem is the system is not out of balance because, of course, he should have done that as an inventory adjustment. Because the operation layer needs to know that it should be adjusted. If you do it directly in Ledger, you will make a conflict between these two. So this is about how reporting in AX has been enhanced. This is not all, because I can use it for more. And that is also a common question I have for users, and that is, if you go to the setup of inventory value reports, and I agree, some of it is potentially not the easiest way to show it, but that is because this is a report framework rather than one report. Can I not? Sorry, I need to get this down. And this, no. How do I show this? This. Full picture. Yeah. Okay, I don't know, I have a formatting problem. If I do this, then it's probably better. Yes. So, we have made that each dimension has a view and a total. And the same with resource ID and with resource group. And the idea with this is, because of SSIS in X 2012, we can actually get data directly into Excel and work with. Normally when we make reports, we get a lot of total lines. Total per item site, total per item group, total for inventory, and so on. And that means if you need to work in Excel with that, you need to go and delete all these total lines, because Excel, if you want to use pivot, creates its own totals. And if you then have total lines directly from the report, you get double totals, and that means you will report wrong values. We did not make a cube for the inventories yet. I would say yet, because we know we have to make a cube, but firstly we wanted to make a report that could report directly from AX, rather than having to use a cube to get a simple inventory value. So we know we want to make a cube for this, which will make it a lot easier. Right now, the solution is print a report where you get all the transactions out, and then move it into Excel. And that is exactly why I have made it these views and total options, because that means we can actually get a complete table without any total lines in it and move it into Excel very easy. And that is exactly what I have with this report here. So if you only press view, it gets columns at this level of transactions, and you can then transfer it. And I will show you what you can actually do with that. So if we run a report like that, which is my report 60. And also a funny thing is, many customers say, I want to be able to reconcile inventory per site. I want the WIP per site. This is actually possible in X 2012, not in X 2009. If you as customer use this dimension locking between an inventory dimension against a financial dimension, and the system is locked, you will be able to get WIP per site, as long as inventory per site. So this is actually the report with all these transactions in it. And what I can do is that I can convert this into Excel. And as every good chef, I've already done that. And it looks exactly the same in the report. There's no change in the layout and so on. And because I don't have any total lines in this report, I can make a pivot table directly on the number. Currently, you only have to delete 2 columns. I don't know. We get 2 empty columns when we export into Excel. And you just have to delete them. That takes 2 seconds, then it's done. And then you can make a pivot. And just to show what I did in 20 minutes by working on the numbers, I can make graphs like this. Let me go up here a little bit. So this is inventory quantity. And you can then do multiple months. Because what I did, I had to cheat a little bit in Excel, I must admit. I had to add a few columns. I needed to add month. So yes? When you do it in 2009,
Not only for this report, I mean the general problem of us. When we transfer to the Excel, we get such a problem. Combine sometimes, distribute sometimes. We don't know why, but it's there.
okay. I would like to talk to you afterwards. I have not discovered any problems with that. So yeah, no, I would definitely like to talk to you about that. The only thing I've discovered yet is that sometimes it makes two columns, and that's because this inventory value report has gazillion columns that you can hide, show, and so on. And that's apparently why when we export to Excel, it makes some of these columns visible as empty because there's no information in them, and you need to delete them for the pivot table. So I added month and year, which is very simple expressions to do in Excel. Then I make a column of sum of issues and a beginning balance, and then average inventory as well. So this is what I did manually. This one you don't have to do. I just did it because I'm not really good in Excel. But this is what I've added, because by doing this, I can make these graphs here, and that means I can actually show how the aging report of my inventory has progressed over months. So that means, again, only one data extraction, and then I can do a lot of reports that AX can also do, but you need to run over the same data once over and over and over again. Now you can do it easily, and you can make it in graph rather than in actually figures and subtotals in a report. And then this is more detail, and then of course for managers you can see which quantity of my inventory, of the total percent of my inventory, and so on. A lot of management figures done in 20 minutes. And the extra columns I added provides me the option of calculating an inventory turn, which is a very key KPI to figure out which items do actually sell in my company, or produce for that matter. Which items actually have an inflow and also a high outflow. And it's also important to see if an item is getting obsolete, and also important to say, can I actually cut down my inventory? Because do I have items with a very low inventory turn with a very high inventory value? And there's no doubt that this item here is definitely on the speakers here. This is on item group level, but I can just click here in Excel, and then it can go down to the specific item and figure out which item is it that I need to look at. In this case, it's item here. That it has a very low turn and a very high inventory value. So potentially I need to deal with this item to figure out, can I lower my value of inventory of this item? Because apparently I'm not selling it anymore. So can I reduce my financial binding in this item and potentially invest in something else? Because this one is probably not giving me a good margin anymore. Done in 20 minutes. So getting the numbers into Excel is where we have the benefits. Right now, as it is in AX 2012, the engine for doing that is the inventory value report. Cube will hopefully come very soon. The conflict report? Yeah. No, unfortunately not. I actually spec the report to be able to run on simulated transactions, but that was unfortunately cut from time, because I would have been like to say, without even posting a transaction, we could run this report as simulation to say, is all your posting accounts rightly set up already? That was cut off, unfortunately. So right now, we only works after you have done the error, unfortunately. One thing, though, is that again, for correcting the issues for the period, is that the reason for why these are blue is that you can actually go directly from the report into the transaction and then start seeing, did it actually go wrong? And then you can see your error and then correct it as measurements. But no, we don't have anything to prevent you from creating errors yet, unfortunately. Other questions? So let's see on the topic list over here how much I actually covered. Costing sheet, purchase cost, cover that. Periodic weighted average is that we have actually optimized the calculation performance-wise, that we don't create as many loops. FIFO, it works the same, because FIFO also used all transactions in the FIFO order, Now we only use the financial transactions for the FIFO calculation, which gives you a better cost as well.
So are we away from all the issues we've seen with average cost?
Can I say all? No. I don't know. I don't know. Many of the issues that I've seen for the last year originates from customers who upgraded. I had a customer a few months ago who actually got a closing problem, that the closing failed to close. And after looking at in 3 days, we found out that it was a purchase order posted in version 2.5, product receipt that was sold, transferred, issued, returned, whatever it was. And then in 2011, 2 months ago or 3 months ago, they said, oh, we probably never get an invoice for this PO. And they invoiced it at zero cost. And that means the system has to go back to all the related transactions for this receipt and go and readjust it to some other values. And that apparently made an error in the closing in today's date. And we had to go and fix that problem. So I cannot say no, because we have a lot of transactions that are questionable, potentially still in the system, which can make errors going forward. So honestly, I would love to say yes, but currently I've learned not to say no more problems. So covered partly, full absorption. We are better in absorption. We don't allow full absorption because, again, currently in AX we only have one, which really goes to here. We only have one representation, which is financial inventory. So we cannot really do full absorption, because full absorption will also mean that you want to put in all the administration cost into your inventory to get what is the actual cost of producing the item and sell it and marketing it, which we are not allowed to because we only have one representation, which is finance inventory. So currently we are trying to stay under what we call absorption of indirect cost under the manufacturing area and purchase area. But definitely an area that we want to go into, definitely an area. And the same with this, of course. ABC costing, it's also a focus area for us. We have the cost accounting module, which is not really specifically designed for any type of cost accounting system. It is primarily used for absorption costing. But because it has the terminology of, it doesn't use the terminology of ABC, but it actually has some mechanism that is close related. It has that you can make cost lines, which is a group of cost. So you could group the cost into one bucket, and the same with the service cost lines. You can group quantities as well into one group as the cost driver, and then you can actually allocate based on this. It's not ABC costing, but you can do something similar. And the terminology is not in any way related to any costing system. Lean costing, currently we only support standard cost. This will change. I cannot say when, but definitely it will change. Inventory decomposition. Right now, standard cost is the only inventory method that allows decomposition for reporting purposes, because it has the roll-up stored. And that, again, this will also be changed. Render rebates, we don't have anything for this, and I will take that with me back and figure out how we put that into our plan for the future. Internal transportation cost is part of our whole landed cost take that we will go. The problem is, not a problem, the solution is that costing team alone cannot do transportation cost. We need other teams to buy in that we should, as a whole, AX, go into landed cost. Because we are not really doing the transactions for landed cost, but we are only costing it. And the same with internal transportation cost and so on. This is definitely a focus area for us to add this to the system. And the same up here with costing sheets, multiple costing sheets for one legal entity, multiple costing sheets for representations, and so on. This is what we work on right now. So AX will definitely change in the future within costing. And we have a lot of topics that we focus on. And if you have other topics, then please email me with that. You can get my business card and email me which areas do you think costing, and within costing should change. And then we will try to prioritize it into a list of working areas. Any questions? Yes?
Regarding the costing, maybe you that they need to have a complete full costing, but if in the same period I have a purchase receipt with a financial cost because I have received the invoice too, and then I have an indirect cost for this receipt from another vendor, for example, freight, transport, custom fee, and so on. There is a way to update the receipt cost of this quantity because this indirect cost can be put in my ledger with item, service, cost category, so on.
Yeah. No.
It's only manually with the
Yeah.
periodic adjustment.
Yes, yes. Currently, we don't have what I call over-under absorption. That you end of period, you go in and the system by itself figure out that I posted so much transportation cost for the period. I estimated in the beginning that the cost would be this amount. That's why my rate is per item that I purchase multiplied by this amount. But that amount has now changed by 2 cents or 20 cents per piece. And then go, please adjust all the purchase items with that cost. This is something we want to automate into a process that you're doing the cost calculation simply, that you'll do this update. You should not, as a user, have to do it manually. But today, it is a manually process to do this. We don't have the feature. We only work what we call normal costing. You can do the planned costing, but the fully actual costing end of period with the indirect cost, we don't support right now. It's manually to secure that. Or you have to expense it. If it's too little amount, expense it, right? But if the difference is too big, I definitely agree. Then you have to go and make the over or under absorption manually today. Yeah. Okay, thank you for listening.